Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, please subscribe for more videos. If you've been here with me, thank you for your support. And today we are going to talk about the best Canadian bank stocks. And before we do that, you can watch how to invest in the stock market for beginners, and you will find the link on the best bank dividend stocks in Canada. So that's the topic of today, and I've already introduced it before. So now, the first one, if you're new into this channel, please subscribe for more videos. So TD Banks is the first one in the list, and I have talked about TD Banks before, and it's one of the third largest company in Canada and the second largest bank in Canada. It's the dividend growth stocks that has already expanded into US market, and they have been growing for years and years, and they pay a huge dividend for people who hold their shares, and their shareholders receive dividends after every 3 months. Is the quarterly dividend. Banks historical price and dividend. So why is it important for you to know the historical price and how far the company has been in paying dividends? So these are the things that are important, just in case if the price fluctuate, you are not supposed to panic, because you know that this company has been around for years, over 200 years in business, and they have been paying dividend. And what happened when their price fluctuate and goes down to very low prices? So what happened? Do they recover? So let's see the historical price and dividend for TD company. So at this time, you can see the TD price is at 99.37. It has been up by 15%. So this one fluctuate the whole time. So the price is here, and the market cap is 181.37. This shows like the volume of the stocks that this company offers. So it's a big company and a stable company. So here, when you look at here, we have the 52 weeks, which is the lowest price this company went to was 72 this week, and then like goes up to 97. So this clearly shows that the prices of the stocks always fluctuate, and it will goes back to normal, fluctuate and goes back to normal. So it was $72 at that time, and then now it's 97, and then today is 99. So if you clearly understand like how this stock market works, and then you don't need to panic, as long as you believe in the company that you're putting your money in. So again, when you look at here, we have a PE ratio of 12.88. If you have 20 shares, and then you can time it, multiply with 0.87, because you get 87 cents per the share that you hold. And when you come down here, this is what they call dividend payout, is 3.56%. And so we can look at the price again, no, the chart. So when you come here, you can look at how this price chart has been fluctuating over the month, this past month. In August and February of 2021, it was here. And then in the month of July of 2021, it came to 88. in the month of November, it kept climbing and climbing and climbing and climbing. So now we are, and it went actually to the high peak of 104.15. Now it goes back to 99. So historically, the price of TD can really goes as low as $50, but with time it will just bounce back and recover to its peak, which is like about $100 for 200 years. So this TD company has been in that business. We have looked at what is the importance of historical price and the dividend that they pay over the year. The TD banks have never missed paying any dividend in the years that they have been in business. So if you are someone who is investing to collect dividend, and then TD is the best bank stock that you can consider putting in your portfolio. For now, we can move ahead and look at some more information about TD. So the core businesses of TD, they do financial services and product to their customers. They also offer mortgages. Most of the time, when you want to look at buying a house, and there will be a TD mortgage calculator that will pop up. Even if you never knew like they do mortgages, you will just know that they do mortgages. So the TD stock price, as I have shown you before, is 99.21 now, and this today. And then there is 104.04. This was the 52 weeks high that it has gone to, and then there was the 52 low. So if you're a short-term investor or trader or something like that, and you buy it at 72, and then your price target will be 104 if you want that huge price target. So because it has gone there before, so there's a probability that this price will go back to 104. Like people who are seeing it out at 99.21 now could see like, oh, maybe I can make a few profit of $10 per share when I buy it now, and it could goes to 104.04. Yes, so you can keep that in mind. Dividend per share, I've already shown you on the chart, and it was 0.89, which is 89 cents. So if you own one share of TD Banks, they will pay you 89 shares, 89 $89, 89, not $89, 89 cents. One share, 89 cents. 89 cents. This miscommunication. If you have one share of TD, you get 89 cents. So about $1. And then the dividend payout for TD is 40%. If the dividend payout is like mostly not over 50 or 60, and then it's a good sign because they are not paying everything that they get from their business. They reinvest some of the money and maybe grow as a company, and then they can be able to sustain the money that they pay you if you're a shareholder who owns shares with them. So they only pay out 40% of the earnings, and they reinvest about 60% back to the business. So it means they can grow and make more money, and they can sustain your dividend. And that's why the TD has never missed paying dividend, because they know what they're doing. And the next banks will be Bank of Montreal. Banks of Montreal. Bank of Montreal is a very good dividend bank. That is the 8th largest company in Canada. It's the 4th largest bank in Canada, and they pay a huge dividend. So they have been in business for long too, like their competitors, TD Bank. So they have been around since 1817, and it's over 200 years. Yeah, and then they have been paying dividend too. So what the importance of seeing them seeing the historical price and dividend price. As I've seen at the historical price and dividends paid out is for you to keep you stable when you have these shares. So if you look at the price fluctuating and moving up and down, and then you don't have to panic and go and sell your stocks on loss, you can hold on and then see the price recovering back to normal. So let me show you. Look at the price of BMO now is at one. If you look at the price of BMO now, you look at it is at 143.05. But before in 2020 it was at $50. You see, so there's that thing. So historically it had gone down to $50. And imagine, there was a time I bought it at 73 and then I sold it at 97. What if I had waited until it is 142.99? So I would have made more money, right? So that is it, that the current price is at 142.99, and we want to see the summary of this company. So you look at the price 142.10, and the market cap is 92 B, which is billion shares. They have like a lot of, it's a big company, they have a lot of shares that they offer to the public. And then now the 52 weeks range has been around $140, and then the 52 weeks low is 94, around that place, right? And then the dividend that they pay out, which is the beta, so it's 1.17. So the dividend the dividend per share is not dividend payout. Dividend per share here is 1.17. So they pay $1. So every time you have a share of BMO, you get $1. You see, that's free money. Imagine if you have 20 of them, 100 of them, so you get $100, right? But it's paid quarterly, so that's $100 in 3 months. So it's money for some people. The ratio is 12.35, and then the dividend payout is about 5.3 to 3.7%. So this is the whole look of BMO. So now let's see, in the last 2 years, let's see on the yes, so in March of 20 March 15 of 2020 March 15 of 2020 there was a market crash just, and then the price was about $50, imagine. And this time maybe people don't understand the fluctuation of the prices and all these things. They must have sold everything that they had, and then now after that they see it rising to 142. You have like lost a lot of money, and then now you see people gaining, those who had bought it. Like if you get in at this point last in the 2020 and then now sell your stuff at 142, that would be about 70 something percent, or even 50%. Yeah, more than 50% price increase, and that would be a capital gain for you, and you have won. So most of the time when you're invested in these companies that you feel that they are very stable, and there's no need for you to panic, you just hang on to your stuff and then wait until the stock recovered and you gain back the money. You can make your capital gain, you can continue collecting your dividend. So that's my strategy. So I invest in companies that are stable, companies that have been around for years, and companies that I have seen surviving hardship, like during wars and all those times. BMO managed to recover and goes back to 143. So I have trust in this, so you can invest in companies that are stable. Team of banks. So we continue with the thing. Core business of BMO are just the same as that of TD. They provide financial services and product and other services like mortgages. And BMO stock, as I've already shown you, is about 142.10, and the 52 weeks high was 142, and the 52 weeks low was 94.90 cents. So if you were to do your short-term trader and you want to use BMO, you can buy it at 94 and then now get out at 142, and you will make more money just investing in that thing. So for now, let's see the dividend per share. I've already said it's BMO have never missed a dividend payout since 1829, so they have been paying dividend. So there's nothing that you need to worry if you invested in dividend. Yeah, so in BMO. So the dividend is about 1.33, but it depends with the price. As the price fluctuate, the number change. So what we saw on the Yahoo Finance today was 1.17 because the price increases to 143. So dividend payout for BMO is 46.93, which is also good because they only pay out a half of their earnings and they reinvest the other part of the earnings. So when they reinvest, they make more money and they pay you your dividend. And it could be like market appreciation later that you can make more money from that. Thank you for watching and subscribe for more video, and see you next time.